Will here with goldenpennystockmillionaires.com, and in this video we're going to help you get a basic foundation on how the stock market works. As y'all already know, we focus on and run the penny stock newsletter, goldenpennystockmillionaires.com. We are a organic penny stock newsletter. We're not involved in paid promotions or pump and dumps. We're accountable to our thousands of members because, well, really, they pay us. Anyways, I'll cover that in another video, but in this video we're going to focus on developing a good understanding of how the stock market works. And we're going to do that in a simple method, paper and Crayola. Hope that's okay with everyone. Now, stocks are a thing that most people have heard of, but not everyone knows exactly how they work or what they're there for. You know that you buy low and you sell high. You flip through the channels, you'll hear the stock market's up, the stock market's down. You'll see Maria reporting on CNBC. You may do what the rest of the world does. Google. Kidding. That's our newsletter page, however. But on your favorite webpage, you'll probably see those ads that state that this stock has gone up 2,500%. Well, we're going to cover that today because a lot of people want to know how they work, but they don't. So let's say that we have a guy named Tom, and Tom here wants to start a business making widgets. Tom goes to the bank and he takes out a loan for his startup costs. So now his business is up and running for the cost of a cool $1 million. After a short while, Tom's business gets more demand for its widgets than he had actually expected. What am I going to do? Grow bigger, but now he needs more money. So how does he get more money? One word, investors. He needs to take out stock for his business. He needs people to invest in him, give them their money, and bet on his success. When you're investing, you're betting on that particular business is going to succeed and not fail. So Tom is now going to gain stock. He goes to the bank and he asks the bank if he can get another loan. At this point, he's already paid off the previous loan. So he and his banker takes a trip to Washington. They go to the courthouse and they say to the judge, my business has grown large enough and I'd like to get some investors. I want to put it on the stock market so people can see me. I mean, how else do you let the world know that you're here? Google. No kidding, but in this case, he's going to take it to the stock exchange. In Washington, he gets their approval and the inspection process begins. They see Tom's widget business and they see that it's fundamentally strong enough to meet the criteria of being on a major exchange and that it can support investors. Its business model is structurally sound to support investors. Now Tom builds his bigger building with more equipment, and this building is worth $7 million. So now it's time to put out the stock, but we first need to decide how much is it worth. How much should Tom sell his widget stock for? Well, one way is to take the cost of the business total and divide it by, say, 500,000, and we IPO price of $14 a share. Professional investors, the financial analysts, employ clever mathematical techniques to arrive at an estimate of the future price of company shares. Since the value is based on the analyst's assumptions, the outcome can actually be different than what was expected. Can anyone say Facebook? But Tom isn't going to take out stock on the whole $7 million, because if he does that, he won't own the business anymore. Let's take out stock on and let's divide that by 500,000. That equals $7 a share. But Tom doesn't actually want the stock to be that low. Tom has the option to lower the number of shares, but he doesn't want to do that either. The price will be the same. Instead, he takes his original formula of 7 million and divides it by 500,000, and he gets the share price of $14 per share. He instead is going to only issue out 1/2 of the shares. By doing this, the company and the investors own the other half. He still sells his shares at $14 a share and raises his capital. Now, his widget company is worth $7 million, and every investor is investing in Tom's company. Already on the major exchange, everyone sees it. He's getting a ton of exposure and investors. He's like a mini Jim Rogers now. He's big. His business is booming, and once again, he's faced with the dilemma that his supply is low in comparison to his demand. So now he's got to get an upgrade for his building, but he's prepared. He slowly upgraded it over time. Here's the newer, larger building, and now his business is worth $21 million. Why? Because he now has all these investors, which are here, invested their money here. They have the option to sell their shares because the price has gone up. But assuming that they don't all sell their shares, a lot of them have decided to go long. Then Tom gets to use the money. It's just like your local bank. The money that is used for investing purposes, and they pay you a paltry amount in interest compared to the amount that they've made. That's just how it is. However, in this case, the interest is that you as the investor bought low, and now the stock is up 3 times the amount. So you sell. You bought the stock at $14 a share and you sold it at $42. Tom resells the shares and makes a profit off of his widget company and is able to afford it because the business is bringing in revenues from making and selling its widgets. So it resupplies the company. Tom has 10 million customers buying his product. This all happens because people have invested into it, and this means a larger building and more manufacturing of widgets. Now, more people are able to buy. So the widget company is making more and is able to pay back its investors with the interest because they have made profits. That's a pretty simple explanation of how the stock market works. Go to our site today, www.goldenpennystockmillionaires.com. Sign up, become a paid member to our newsletter, and start making money. We also have a video that shows you step by step how to open your first trading account. If anyone has any questions about this video or any questions that you may want to ask, go to our website, send us an email, and I'll answer your email. Thank you guys for listening, and I hope that this helped. Become a member today.